Hi guys, and welcome to my channel, She Got Options. If you watched last week's video, we did a tutorial on support and resistance. In that video, I had mentioned that I wanted to go over that first before getting into candlesticks, just because they kind of go together and it makes more sense when you understand support and resistance. So if you haven't watched that video, I suggest that you go watch that video first and then come back and check out this video on candles. I will also go ahead and I'll post the link of that YouTube video in the description box of this video. Okay, so this week we're going to be talking about all things candlesticks. We're going to go over exactly what a candlestick is, the anatomy of a candle, the types of candles. I'll go over 3 bullish candles, 3 bearish candles, and I will show you 4 doji candles. So what is a candlestick? A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a stock for a specific time period. Okay, so before I go any further, let me explain what I mean when I say specific time period. When you hear that phrase in the market, you need to know that there's different time frames that people monitor a stock. So if you look up here, we have this thing called time frame setup. Right now we are currently on the 1-minute chart. So all these candles represent 1 minute worth of price action. So this is what a stock did in this minute. Here's another minute, and then when you hover over it, you can see all the information up here. So if we're on this candle, this is 11:45, and then it goes to 11:46, 11:47, and so on. You can switch to the 5-minute, so then the candles would represent 5 minutes. Then you can go to the 15, it'll represent 15 minutes. In the 1 hour, you have the 4 hours, you have the daily, that represents a day's worth of movement, and then you have the weekly. I'll have another video on that another time explaining more about that. So let's get back into the stock. So okay, here if you look at this picture, this is the anatomy of a candle. Okay, so every candle is going to have the open price, the closing price is going to have the high that it's reached, and it's going to have the low, and it's going to have the body. The body is going to represent the like how strong the buying pressure is or the selling pressure. Okay, so when you have a red candlestick, as you see to the left, that is a bearish candle. That means that the stock is going down. So when it's a red candle, the opening price will start at the top of the candle where it says open. That's where the price will start, and then throughout that minute or whatever time frame you're on, it's going to go down. And then where you see it closes, that's where it ends. When that 1 minute or when that 5 minute or whatever time frame you're on, whenever that time ends, that's where the candle's going to close. That's the price that it closes at. Okay. Now, during this time period that you're on, it's going to reach a high and it's going to reach a low. And those are the upper shadow and the lower shadows, aka the wick and the tail. So the top of the upper shadow, that represents the highest that the stock got within that time frame. Okay, and then the tail represents the lowest price that stock got within that time frame. Now, if you look to the right with the green candle, that is a bearish candle. Okay, that is going to represent a stock price going up. So it's the opposite of the red candle. So the opening price is going to start at the bottom. That's where it starts, and then it's going to go up and it closes at the top. And again, just like in the other candle, the upper wick and the lower wick represents the highest that it's gotten and the lowest that the price gotten. Okay, so if you look back on this screen, we can, again, when you hover over a candle, all the information is going to be up here. So if we hover over this candle, this is a green candle, so the open would start at the bottom down here. And as you can see up here, the opening price is $386.91. And this is all the buying pressure, buying pressure. Now within a minute, it closes at 387.19, okay? Now within this minute, the highest that the stock's price has gotten was 387.23, and the lowest was 386.91, okay? Now the same thing if we look at this red candle. Let's use this red candle because it has a wick. So it opens here. It opens at 387 and it's going down within a minute, and it closes at 387.15. The highest that the stock has got was 387.25, and the lowest that it has got was 387.05. Okay, when you're seeing candles on a chart, there's going to be three candles you're going to see. You're going to see a bullish candle, a bearish candle, or a doji candle, okay? We went over the bullish and the bearish, the red and green one. Now these candles right here, these are dojis, okay? And we'll get into that. But these are more like a lot of indecision in the market, but we'll get into that. But I'll show you a few bullish candles, some examples. So the first one that we'll go over is the bullish engulfing. Now, an engulfing candle is like one of the most popular candles. You'll see these a lot throughout your chart. So the bullish engulfing pattern is formed of two candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle. So as you can see in the picture, the green candle is bigger than the red candle that is in front of it, and it's engulfing it. It's like it's eating it. It's way bigger. It's just hovering over that little red candle. So when price hits a support level, and if you see an engulfing candle like that, that is a signal to traders that the price is potentially going to go to the upside. So they would enter a position there if they were bullish on a stock, okay? The next bullish candle we're going to talk about is the hammer candlestick, okay? The hammer candlestick pattern is formed of a short body with a long lower wick and is found at the bottom of a downtrend. So again, this is another bullish sign for traders. When the stock hits a support line, and if it forms that hammer candle, which is a small body and a longer wick, it's another signal to traders that the stock may potentially reverse to the upside. So they will wait for confirmation and they will get in a trade that is a bullish trade. Okay, so now we're going to talk about the inverse hammer. Now this is similar to the hammer. It's just an inverted hammer. The only difference is being that the upper wick is long while the lower wick is short. So just like the hammer, it has the wick, but it's to the top instead of the bottom. Okay, and again, this is another sign when a stock's price reaches its support line. If this inverse hammer forms, it lets traders know that the stock is potentially going to go up. So they wait for confirmation, as always, and then they take a position to the upside. Okay, so now let's move on to bearish candles. We have here pictured a bearish engulfing candle. Okay, it's similar to the bullish engulfing, it's just opposite. It's bearish. A bearish engulfing pattern occurs at the end of an uptrend. The first candle has a small green body that is engulfed by a subsequent long red candle. Okay, so as you can see, the red candle is eating the green candle, okay? So this happens at a resistance line. Instead of the support line, you will look for this at a resistance line. It's letting you know that the stock is in an uptrend, but it's going to potentially reverse because it has formed a bearish engulfing candle. You're going to wait for confirmation, and traders will take a position to the downside because they're believing that the stock is going to go down. Okay, another bearish candle would be the hanging man. The hanging man is the bearish equivalent of a hammer. It has the same shape but forms at the end of an uptrend. Okay, so just like the hammer was bullish, we talked about that happening at the support line. This is the same thing. It's red and it happens at like a resistance line. Okay, again, the stock was in an uptrend. Then this hanging man forms, so that alerts trader that the stock is going to potentially reverse to the downside. They're going to sell their position, or they're going to enter for a bearish position. And the next one is the shooting star. The shooting star is the same shape as the inverted hammer, but it is formed in an uptrend. It has a small lower body and a long upper wick. Okay, so this is like the opposite of the inverted hammer. It's just everything's opposite. Again, stock was in an uptrend. Here comes the shooting star. That is an alert to traders that the stock is going to potentially reverse. If they're in positions going up, they're probably going to sell their position, or they're going to enter a position thinking the stock is going to go down. Okay, so those are a few candles for bullish and bearish candles. There's a lot of other ones. I just wanted to keep it really simple and just show you a few. And you can always, research other candles out there and look for them. Now let's go ahead and talk about the doji candles. Okay, so there are these 4 doji candles that you can start with. There's the neutral, the long-legged, the gravestone, and the dragonfly. Now, the neutral doji, it's just saying that, it's a candle reversal pattern that forms after a bullish or bearish trend signaling its reversion. Okay, so it can be either bullish or bearish. Okay, it's if the stock is in an uptrend and you see this neutral doji, it means, okay, if it was going up, that means it's going to possibly reverse to the downside. Now, if it was already going down and then you see the neutral doji, come at the support, it's saying that it's going to reverse back to the upside. So it can be either way. It just depends on what direction the stock is going. Now, the long-legged doji, this signals indecision about a future direction of the price. And it may also mark the beginning of a consolidation period. So a stock can either be going up, it could be going down, or it could be consolidating, which going in a sideways range. So if you see a long-legged doji, it's really like the market doesn't know what direction it wants to go. It's indecisive right now. And it also may just mean it's going to consolidate for a while until it wants to pick a direction. So then we have the dragon doji, the dragonfly, excuse me. This sometimes is seen at the bottom of a move. The open and close prices are usually the same. The long wick below indicates a reversal to the bullish side. So that would be like at the end of a downtrend. And if you've seen a dragonfly doji, it could potentially mean, that it's going to the upside. Because the wick, if you look at the wick, it's really long at the bottom. And that represents, at the end of that wick, remember that represents the lowest that a stock's price has gotten. So it went all the way down there, but buyers pushed it all the way back up to where you see the top where it forms like a T shape. So that means that buyers stepped in, and took control. So that means it could potentially start going to the upside. And then you have the gravestone. This is often seen at the top of an open. Like it's just like the dragonfly doji, but it's like a reverse. Okay, so if a stock has been going up, 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 and then you see this gravestone, again, the wick at the top represents the highest that the stock has gotten. So it's gotten way up there. However, sellers has pushed it down to that bottom with that small body. So that represents a lot of buying pressure, and it could potentially mean that the stock is going to reverse to the downside. So those are just a few candles, bullish, bearish, and doji candles, just to kind of get you started. Okay, now this is why I said it's important to know support and resistance, because you know a lot of the price action is gonna happen at the support and resistance line. So I'm gonna go to my chart. I'm going to add back my support and resistance. We went over this last video, so go ahead and watch that. Excuse me, have selected. Okay, so let's see what we got. See if I can find some action. Let's go to the 5 minute. Okay, so here, right here, you can see that this is a hammer. Okay, remember this was a the one that I showed you was green and it was a bullish indication, but this one is red, but it still means the same thing. As long as it's at a bottom, like the support line, and if it's a hammer, whether it's green or red, it's an indication that the stock is going to reverse to the upside. Okay, so it was in a downtrend, it came and hit this support, and it formed a hammer. That let traders know, okay, it's going to potentially reverse and go up, and that's exactly what it did. It went to the upside. Okay, let's see what else we can find. Okay, here on top, this is a resistance line, okay? Right here, this formed a, this is a shooting star, okay? We talked about that. The one that I showed you was red, but this one is green. But again, it means the same thing. As long as it's at a resistance line and it's coming from an uptrend and you see this shooting star form, this lets traders know, okay, the stock is going to potentially reverse to the downside, okay? And what did it do? It kind of consolidated a little bit, but then eventually it did, you know, reverse to the downside. Now let's see. Let me try to find a engulfing. Okay, perfect. We got one right here with Tesla. This would be considered an engulfing candle. The body is bigger than the body of this one. It's engulfed. This body is engulfed in this one. Okay, so that's a sign that it's going to reverse to the upside. And that's what it did. Not much, but it did. Okay, so that's basically the basics of candlesticks. That is how you read candles. That's how you know what's going on. You wait for them to get to their support and resistance and see what it forms. And that's going to give you like kind of some insight of what's going to happen next. Now, what you can do to study these things, if you want to play around on your chart, okay, make sure you put your support and resistance on there. Then you can also go here to where it says patterns. Go to select patterns. Click on the candlestick. And then just put everything that we talked about. Okay, we talked about dojis. We talked about engulfing. Okay, wait. Add the doji, the engulfing. We did the hammer. We did the hanging man. And what do we do? The shooting star. Let's see, shooting star. So if you add all these patterns and apply, it's going to automatically point out everything that you selected. So it's pointing out hammers, hanging man, shooting stars. Now you can go through a couple stocks and just kind of go to the support and resistance and see if any of those are on there. And that's just a way to kind of get familiar with the stock, or excuse me, with candlesticks and support and resistance. Trying to see if we can find one that we talked about. Okay, so yeah, they have a couple marked here. So yeah, you can just kind of do your research. It's depending on, I'm not sure what well, I know this is the hanging man, but they're different markers. So you can go in there and edit it too, so you're not confused as to what it's pointing out. If you go back here and go to your settings, okay, now we know this indicates that it's showing you the dojis. Okay, you can change it if you want. This colors in this arrow is indicating that it's showing the engulfing candles and so forth. So yeah, it's just a tool you can play around with just to kind of get familiar with these candlesticks. And oh, and another thing before I forget, I should have mentioned this in the beginning of the video. This is the book that helped me understand candlesticks. It's called the Candlestick Trading Bible. There's a PDF that you can download. It's free, so I'll go ahead and put the link of that PDF in the description box of this video so that you can go ahead and check it out. I just suggest you take your time with the book. It's a lot of information in there. I would break it up in parts. Stop at the points where he's giving you lessons and kind of go back and really research. You know, since I showed you on the charting platform Thinkorswim how to flag those patterns or those candlesticks. Whenever he mentions one, you can come back to your charting system. You can put it on your chart and go through stocks and kind of look for it, and so that you can get a feel about what he's talking about, and it really resonates with you. So I hope that this video was helpful. If it was, please hit the like button and be sure to subscribe to the channel so that you are uploaded anytime I post a video. Thank you.